This is a walkthrough of task 5 of sample assessment 1 for internal accounting systems and controls. So we've got quite a lot of information here, so let's have a look at the requirement first of all so that we know why we're going to be reading that information. And it asks us to complete a financial cost-benefit analysis for the above proposal. So we're provided with the table there where we put the costs and the benefits, and then at the bottom we're going to enter a negative number if there's a net cost or a positive number if there is a net benefit overall. So what we need to do then is, as we go through the information, we need to identify what are the costs and what are the benefits. Now, when we're thinking about this, we do need to take into account the idea of relevant costs. A relevant cost is a future incremental cash flow. So the idea of the word future is that if we've spent some money already, then that's a sunk cost. Remember the terminology, sunk cost. So we shouldn't take that into account in our decision making. We need to decide, if we're going to do something now, what will be the future benefit, what will be the future costs, and we want the future benefits to exceed the future costs. Now there may be some cost already in the background, there may be some benefits already in the past, but that shouldn't influence what we're going to do now. Because if we consider historical events, that may influence us too much and may not give us the right answer. There may be mistakes in the past, and we shouldn't let those historical mistakes influence our decision now. There have been lots of projects that lots of businesses have performed where they've been committed to a project and they're going to see it through, and really partway through someone should have said, well, let's just stop here. Clearly, we're not going to get the benefit from this project. Okay, we spent a lot of money on it so far, but let's not waste any more money on it. Okay, so that's why we need to focus on the future. Next, a relevant cost is incremental. In other words, it's linked directly with the decision we're going to make now. There may be some other costs that are associated with the business, but if they have nothing to do with this particular project, then we should exclude them from our decision making. Okay, so are they directly linked with the decision we're going to make now? And then we also need to think about cash flows, because there are some non-cash things like depreciation, for example, which is really just a paper-based expense. It's not a real outflow for us, so we're going to ignore that. So yeah, we only want to think about cash flows. So let's go through the information then and see if we can identify these future incremental cash flows. So it tells us that Annabelle is looking to continue with recent rapid expansion, and Lucy Taylor, the managing director, is sure that this growth would be more rapid if the business began to offer bespoke products. So that's what we're thinking about now. Yeah, should we offer bespoke products rather than just standard off-the-shelf products? So currently, if a product costing is needed, it has to be produced manually. This will have a significant impact on the time from order to delivery for bespoke products. Harvey Smith, the finance director, has also expressed concerns about the accuracy of data produced in this way. So yeah, a customer will come to us, they want a particular product, and we need to decide, well, will we make it for them? So we need to do a costing for them, don't we? But yeah, there have been problems with this. It takes time and may not be right. So you've completed research into possible systems that may be used to automate this process, and you've concluded that the most suitable system would be this BCSY system. The cost of research was $5,000. Well, that's happened already, hasn't it? That is not a relevant cost because it's nothing to do with the future. We've incurred that cost already, so it's no longer relevant for our decision. Next, you would need to attend a 2-day training course charged at £1,500 per day. Well, yeah, that's going to be in the future, isn't it? So that is a relevant cost. That's a cash flow, it's based on this decision, and it's in the future. So the production manager and warehouse manager would also need to attend the course. So actually there's going to be 3 of us doing this. There's me, the production manager, warehouse manager, there's 3 of us, and it's a 2-day course. So you need to multiply by 2, and it's going to cost £1,500 each. So that's overall going to cost us £9,000. And it tells us, as the production manager is not currently using IT, there is a small chance he may need an additional 1-day training. Well, given that it's a small chance, okay, that's our hint that the examiner wants us to ignore that in our cost-benefit analysis. Now, in the real world, you might choose to include that to be a bit more prudent, But in terms of this AAT assessment, yeah, it's suggesting that we can ignore it. So there's our first cost. Yeah, we'll have our training costs, and we're going to have a 9,000 cost here. And then it tells us that new hardware would be needed to run the system. And as the current IT system is dated, it's been decided that if the system is to be introduced, all hardware will be updated to ensure that it is able to fully integrate and work to its full capacity. This will have a cost of 75,000 per annum. So we've recognised there that we're going to have to update quite a lot of hardware, and arguably it's not all relevant for this particular system, but it will need to be updated for our other systems to talk to it. So yes, that's going to be a cost for us. So this is our hardware, and that's going to cost us £75,000. And then software will have a total annual license fee of 35,000. So yeah, we've got our software as well, and that's going to cost us 35,000. Now, both of these tell us these are annual amounts, whereas the training course, that's going to be a one-off expense. But we don't have any information here about the number of years we're going to be using it. So I think we just need to be a little bit cautious here and just include this for the cost benefit for 1 year. Now we're also told, as a result of the new system, you've identified the following. There's going to be a permanent decrease in the inventory holding of raw materials, and that's a good thing. So yeah, this is a future decrease. It's incremental to us implementing this system, isn't it? And yeah, that's going to save us money. We're not going to have to spend so much money on the inventory. So that's going to be a relevant benefit, isn't it? Not a cost, but a benefit in this case. So yes, we've got the inventory holding, and we're going to receive a 20,000 benefit of this. Now, there's less overtime needed to produce and for finance staff with more timely production and monthly management reports. So that's a good thing, isn't it? But we've got no financial data for this, and the question is asking for a financial cost-benefit analysis. So that would still be relevant for our decision making, but we can't include it in this financial cost-benefit analysis. And then we're also told 2 customers with orders totaling 25,000 were shown the new system and decided to upgrade their orders to bespoke products with a value of 3,900. So is that a future benefit? Well, yes, it is. But what is the incremental impact of this? So they were going to spend 250,000 each anyway. So the incremental benefit is just the difference between the two. So they're going to spend an additional 140,000 on this. So that's the incremental benefit. If they're going to spend some money with us anyway, that's not part of the benefit of this decision. And is that going to give us a cash flow? Well, yes, it is. Now it tells us that there are 2 customers. So do we need to multiply this by 2? Well, no, we don't, because it says that it totals 250 between them. So we don't need to multiply by 2 in this case. So yeah, so we have an increase in sales, and we're going to receive a further 140,000 as a result of that. So we just need to work out our total now to see overall, will we get a benefit or not? So we've got a total benefit of extra cash coming in of 160,000, but we will spend another 35,000 on software, 75,000 on hardware, and 9,000 on training. So overall, we have a net benefit of 41,000. So that's a good thing, and that would suggest that we should go ahead with this new system. Right, moving on then, it asks us in part 2 to identify 6 non-financial factors that should be taken into account when we are thinking about this cost-benefit analysis. Well, we've got some information about this in the text, haven't we? We're told that we will need less overtime for production and finance staff, and we're going to have more timely production of monthly management reports. So both of those answers can be included in part 2 of the question. Now let's think about the sort of the knock-on effect of this. If we have more timely production of monthly management reports, that means that we can also have access to better decision making. More timely information means we can have more timely decisions. And then what about the overtime? So yeah, less overtime is going to be good for our business. That's going to reduce our cost. But the question is asking about non-financial factors. So what about our employees? Will they be happy that they are working fewer hours and potentially earning less money? So there's a possible knock-on effect because of that as well. The text also tells us that we will need these additional training courses for these 3 people, but what about all the other staff? So we need to think about all of our production staff and our finance staff. They may be involved with this as well, so we need to consider their capability to be able to use the new software. But also, while we think about this staff, well, how will they react to the change? We know that in general people are quite resistant to change, and so they may be upset by such a big change to the business. Remember, we're trying to move away from standard products to completely tailored products for our customers. That's quite a big transformation of the business, isn't it? And while we think about change management, we need to appreciate that when any new thing is implemented, there may be some teething problems at the beginning which may cause some problems. So we may have some initial production problems as we implement the bespoke production, but in the long term, hopefully those teething issues will be settled, and in the long run, we should be more efficient and therefore reduce our overtime and our costs. The text also tells us about integration of the hardware. So we're going to replace all of the hardware so that it does integrate. But what about the software? It doesn't tell us that the software will talk to all the other systems that we have. So we just need to be aware that potentially there may be some inconsistencies between the software. They may not connect properly, and there may be some integration problems there. So the question was asking for 6 different factors for the 6 marks. So we've covered that, haven't we? And then part 3, recommend with 2 reasons whether or not the proposed investment should be made. Now in AAT suggested solution, the recommendations could go either way. So you could either say that yes, go ahead, or no, don't go ahead. So in your assessment, you need to have some sort of clear guidance. What are we going to decide? So our recommendation would be that given that we've got a positive number in our cost benefit analysis, then we would suggest that you recommend that yes, we should go ahead with this. And that's a sort of an easy approach that you can take in your assessment, because if you're worried, it could go either way. You could spend a lot of time in your assessment thinking, well, yes, there are pluses, there are minuses, and you spend a whole load of time trying to decide what to do. Well, our recommendation, our cost benefit analysis gives us a positive number. We've got a net benefit, so go ahead. So it's asking for 2 reasons for this. So one of the reasons will be that we have a positive cost benefit analysis. So we've got an overall cash inflow as a result of this. But also it's going to support, remember, what did we want to do? We want to continue with our recent rapid expansion. So this is going to support our strategy to expand the business. And we can see that our customers are going to be happy with this because customers want to upgrade their products. So there's a further reason for doing this as well. We're going to please our various stakeholders. And then in part B of the question, asks us to identify which 4 of the following would be a concern when implementing a new system. So we've got a sort of drag and drop question here. So if we're going to implement a new IT system and we've got consultants coming in to help us with that, then we need to be worried about the security of data, because we'll have access from other people to our data, and when we're implementing the new system, perhaps some of that data may get lost or shared, and that could be a problem. Next we have ethical implications. Well, there's no particular hint in the scenario about ethical implications here, so I think we can ignore that one. But yes, employees not being prepared, that is a typical problem with any changeover system. It's not unusual that the managers are thinking about change for a long time and they have plenty of time to absorb that change, and then they announce it to the employees, who then have very little time to get used to it and start working with it. And as we saw in the scenario earlier, 3 people are going to be trained, but there's no suggestion that the employees will be trained. So yeah, that is a risk, that the employees are not prepared. Next, public image of the organisation. Well, yeah, that could be a possibility if our change management is not done very well. So potentially, if we have lots of customers who are members of the public and they're upset by this, that is a possibility. But the overall public image, if we run it properly, won't be a problem. So let's make that a question mark. We might need to come back to that if we don't have any better answers. And then next one, limitations of systems being replaced. Well, hopefully not. If we're going through a proper change management, we will have identified all the issues with the system and we won't have any limitations. So that may not be an issue. What about declining productivity? Well, yes, during the change process, that is likely to be the case. As people are getting used to the system, they may not be fully productive. So that's a typical problem. And then the length of the use of the old system, well, no, that shouldn't have any impact. Just because we've been using the old system for a long time, that shouldn't be a reason why we're going to have problems with the new system. And then unrealistic expectations of the users. Oh yeah, that's a very popular problem, that the users will think that the new system will solve everything and it will be the best thing since sliced bread, but actually it won't be. Because there will always be some systems that are not perfectly designed for what we want to do. So yeah, these are the 4 ones that we think are the appropriate one. Public image is a possibility, but that's not as strong as the 4 that we've highlighted on the screen. And then the last part of the question, as an additional task and in preparation for the potential changes needed if bespoke options products are introduced, you've also been looking at ways to successfully implement new systems. And we need to identify whether the following characteristics are associated with piloting a new system. So remember, there are a number of ways that we can change from one system to another. In our learning materials, we provide you with this diagram to help explain the difference between them. So what we could do is have a direct changeover. So you can see there on the diagram, so there's a timeline along the top. So we're going to be using the old system, and then at a particular time when we want to implement the new system, we just stop using the old one and start using the new one. And then under a parallel system, we're going to be using the old system, and then when it's time for implementation, we'll be using both the old and the new system in parallel. And this is a good way to test that the new system is coming up with the same results as the old system. And then when we're satisfied that the new system is working, then we'll stop using the old one and use the new one only. Under the pilot method, and that's the one we're being tested on in this task, we'll be using the old system, and then when we're ready to implement, we'll use the new system in a pilot area, but carry on using the old system in the rest of the business. And then when we're satisfied that it's all okay for the pilot area, then we'll stop using the old system and use it in the rest of the business. And then we have the phased implementation, where we're going to be using the old system, and then department by department or area by area or customer by customer, we'll start using the new system until eventually, and you can see on the diagram, that may take quite a bit of time for that to happen, but yeah, eventually we will be using the new system throughout the business. Okay, so hopefully that was a useful recap of those. So in this particular case then, what we need to do is decide whether or not these characteristics are associated with the pilot system. So the first statement we have is initially started on a small scale to assess the viability. So yeah, we can see that that's what's happening, isn't it? So we're going to start off on a small scale in the pilot area, and if we're happy with that, then we're going to implement it with everything else. So yes, that is associated with the pilot system. Second statement, it is designed to manage the risk of a committed project on implementation. Well, yes, there is some truth to this, because we're using it in the pilot area, and if it doesn't work in the pilot area, we can stop, can't we? So it does help us to manage the risk. But in this particular statement, it says that it is a committed project. So if it's a committed project, then actually we aren't going to be managing the risk at all, are we? So it's that one word that makes the difference here. So yeah, it's not associated with that. Okay, if we're committed to the project, then we can't really change the risk profile, can we? Next, if fully complete, a pilot scheme will deliver a predetermined outcome. Well, no, that's not true, because when we're implementing it in the pilot area, we may make some changes. We're going to be learning from what happens in the pilot so that the implementation for the rest of the business will be more successful. So no, that's not true, because we may not achieve that predetermined outcome. We may change things based on the results of the pilot. In our fourth statement, sometimes puts usual business activities under more strain. Well, yeah, that is true, because if you think about the rest of the business, yeah, they could be having a few problems because we're sort of diverting some of our attention to the pilot area. The next statement increases risk for the main rollout. Well, no, hopefully not. That the point of doing the pilot is that we're sort of doing some testing in the pilot area, and based on the pilot, we'll be able to have a more successful and less risky implementation for the rest of the business. So that's not associated with pilot. And finally, it will allow for potential change in the approach. Well, yes, that's the idea. Having run the pilot, we may decide to do things a bit differently when we implement for the rest of the business.